Welcome everyone to the Vested Interest channel. This is Shane back for a Stock Pick of the Day video. We're going to take a look at one out of the financial sector. This is Brown & Brown Insurance. Now this is the criteria we're going to look at in the video today. This is just an initial screener, so we're going to run through it, see if it meets 6 of 9. Since it is out of the financial sector, we will be looking at price to book. The financial sector, especially for banks, one is fair value. Now, a lot of times companies outside the banking sector don't really follow that rule, but we're going to use that rule for today, even though it's an insurance company and not a banking company. So it must meet 6 of 9 instead of the 5 of 8 that we typically look at. All right, if you want to know more about this company, check them out at www.bbrown.com. That's www.bbrown.com. That is the homepage where I pull this information from. Our story, your solution. In 1939, Brown & Brown started as a small two-partner firm with a bold vision centered around relationships. While this vision has propelled us to grow into one of the world's largest insurance brokerages, our foundation remains the same, committed to trust, resilience, teamwork, and delivering results for our customers. Businesses don't stand still, and neither do we. Our strength is our people with deep local connections and the resources of a global leader. We take an agile, forward-thinking approach to risk. Whether our customers are expanding, evolving, or facing new challenges, we build solutions that help protect what they value most. Now, that really doesn't tell us very much, but they are an insurance company, and over here are some of the products that they offer. Property and casualty insurance, employee benefits. You might get your insurance benefits from this company. Personal insurance, you as an individual, and industry insurance, right? If you have a business or work for an industrial company, their company may use this insurance company, for the things that they need. They cover agriculture and food, construction, energy and power, utility, financial services, healthcare and pharmacy, hospitality and gaming, manufacturing, marine, public entities, real estate, transportation, tribal, all industries. Really, they are top 10 insurance brokerage, 700 locations, 23,000 employees in 19 countries. I think that's important. And 4.8 billion in revenue in 2024. Again, www.bbrown.com is their homepage if you want to know more about this insurance company or need insurance, I guess. Now, the reason we're taking a look at them, down 2.52% on the day. We are talking about Brown & Brown Inc., ticker BRO. Again, this is an insurance company out of the financial sector. Closed out the day at $80.30. 52-week range as low as $79.68, as high as $125.68. Right up against their 52-week low currently, and definitely within 15% of a 52-week low. Market cap of $27.061 billion, a beta of 0.79, so less volatile than the overall market. PE, price earnings ratio, seems a little elevated at $24.33 per share, but that's really not a good one. We need to look at price to book, so we'll look at that here in a second. Earnings per share, EPS at $3.30 per share. Earnings date, January 26, 2026, so towards the end of January next year, right? It's funny to say next year, but we're almost there, right? We're almost out of October and into November. So the year 2025 is quickly closing out. Ex-dividend November 5th. So you've got some time if you want to buy this one and get the next dividend. You need to be buying on November 4th or before. Don't wait till the 5th. The ex-dividend date does not guarantee you the next dividend. That is just whenever they record who owns the shares. And typically, if you buy during the day, you don't technically own the shares until the close of business. They usually record the share owner at the close of business, right? So it would show up the next day. You would own it on the 6th if you were to buy on the 5th. Buy on the 4th, you would own it on the 5th, right? 1 year target estimate, $107.50. So they do see some upside from where it currently sits, at least according to Yahoo Finance, where I pulled this information from. I'm not affiliated with Yahoo Finance, just one of the sources I go to for information. Now, I like to look at dividend yield theory to see if the company is potentially undervalued. It's just a quick check. It is not an end-all, be-all. It's not a discounted cash flow analysis, but it is a decent measure in my opinion, and it is a quick one. And to do it, we look at their 5-year dividend yield average, 0.63%. We compare it to the current 0.80, or over here where it says forward 0.80. Since it is higher than their 5-year average, that actually speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio, 18.18%. I like under 75%, so they are very low. Lots of room to continue to raise that dividend, pay down debt, make acquisitions, reinvest back into the company, buy back shares if they want to, pay a dividend, which they do, raise that dividend over time, or even keep some of that cash on hand as cash or cash equivalents, and that all comes from free cash flow. So we want growing free cash flow to go along with it, but we'll look at that in a second. Let's look at the price to book. Now, current price to book is at 2.66. That is lower than the one we're looking for, but if we compare it to itself, going back to June 2024, 4.41, September 2024, 4.92, December 2024, 4.51, March 2025, 5.55, June 2025, 5.36. It is much lower than it has been over the last year, almost year and a half now. So compared to where it's been recently, it is undervalued according to price to book, but it is not quite under that one, which is not uncommon for insurance companies. They typically run a little bit hotter than that. But one for banks is fair value. Anything over one, undervalued, or over one, overvalued, under one, undervalued. For this one, I would really compare it to itself over time. So it does look like currently it is undervalued compared to where it's been in the last year, year and a half. Now, free cash flow, I want growing free cash flows. Like we mentioned, they could do some things with that, and I went over them a second ago. December 2021, $763 million. 2022, up to $829 million. 2023, $941 million. 2024, $1 billion, $1.0 billion. Trailing 12 months, 1.2, but keep in mind, this does include part of 2024 numbers still. We're almost out of 2025, so getting close to the end of it, but about 2 months of these numbers here in the trailing 12 months would be out of 2024. So it looks like growing free cash flow consistently year over year, definitely over the last 4 years. We'll see how the rest of 2025 shakes out, but it looks like much the same. So that is what we want to see. That is the nice stair step up with free cash flow you want to see out of a company, or at least I do. Repurchase of capital shares, they're pulling shares out of the market. 2021, 132 million. 2022, 123 million. 2023, 40 million. 2024, down to 55 million. Trailing 12 months, 42 million. But again, part of that trailing 12 months is still 2024 numbers. So we'll have to see what 2025. But they are pulling shares out of the market. They have decreased that slightly in these 2 years. So you might do the math to make sure that free cash flow is indeed growing, but it looks like it is growing over time, with them adjusting their repurchase of shares probably based on their free cash flow output. All right, jumping over to stockanalysis.com. This is another source I go to for information. Again, not affiliated with stockanalysis.com, not affiliated with Yahoo Finance. Two of the sources I go to for information. You pick any sources that you like. Lots of them out there. I just recommend more than one so you can make sure the information you are looking at is accurate and up to date. That's up to you, though. If you want to blindly follow one, more power to you. I just recommend more than one, just in case, it's not updated or they just have wrong information. It does happen from time to time. They do have 13 analysts that have taken a look at it over stockanalysis.com. They call it a consensus buy, though it is right on the edge of that hold and buy. And if you were to go to the website, you'd be able to click on this and see how many might call it a strong sell, a hold, a buy, or a strong buy out of those 13 analysts. Low estimate of $87. It currently sits lower than that. So if it came back up, that would be a potential 8.34% increase. Average estimate of $109. That's pretty close to what we saw with Yahoo Finance on the previous page. That would represent a potential 35.74% increase. And if it happened to hit their high estimate of $130, that would represent a 61.89% upside, and you could collect that dividend yield along the way. It's pretty small. It's under 1%, but nonetheless, you'd be able to collect some dividend cash flow while you waited for that rebound. Now, some statistics I like to look at for companies is return on capital employed and earnings per share growth. For return on capital employed, I like above 10%. They're a little lower than that at 6.57. EPS growth, I like above 5% projected over the next 5 years. They did not have anything listed, so can't really look at that. Revenue growth forecasted at 8.04%. Not part of the initial screener, but I like to look at it here anyway. It's right there, so why not snip it? All right, dividend history, quarterly payer, as we mentioned, payout ratio again, 18.6, very low payout ratio with double-digit dividend growth. Love to see high dividend growth with a low payout ratio. Very, very nice to see. Sometimes it really bugs me. Companies like Google, for example, they have such a low payout ratio, but then they're only growing the dividend by like 4 or 5%. That really bugs me. It's like rewards your shareholders, unless they're buying back shares significantly or something like that. But I like to see the shareholder rewarded for holding stocks, or at least I want to be rewarded. Growth of 32 years. Buyback yield is negative at 6.01%. We want to see this turn around. This means they are issuing more shares than they are buying back. Shareholder yield is negative as well, negative 5.27%. We want to see this positive as well. Now, they do pay off schedule for most companies, February, May, August, November. That's nice if you're trying to balance out your dividend payouts over the years. Companies that pay off schedule like this are some of the ones you might want to look at. It's what I do in my portfolio. Going back in time here, May 2023, they were paying 11 cents and some fractions of a penny, raised it up to 13 cents October 2023, raised it up to 15 cents November 6th, 2024, and most recent raise is going to be the November payout there, 2025, up to 16 cents and some fractions of a penny. So nice dividend growth on this one. Let's look at the screener and wrap this one up. All right, vested interest stock screener here. Understand the business. They're an insurance company. They do insurance company things, right? They're looking at risk. They're issuing insurance for you, whether that's individual, whether that's business. They will cover that. Growing free cash flow, yes. Nice growing free cash flow. Growing dividend, yes. Double-digit dividend growth. Dividend payout ratio is much lower than 75%. It's under 20% actually, so check there. Dividend yield theory says they're potentially undervalued right now, so check there. It is within 15% of a 52-week low. It's right up against it, actually. Return on capital employed was under 10%. No check there. Earnings per share growth was not listed, so can't give them a check there. If you were to find that, and maybe it's over 5%, that would give you another one, but you'd have to go to another source to find it. And price to book was not under 1, but it does look like it's undervalued compared to where it's been historically over the last year and a half at least. Now you could go back and look a little further and see what that's looking at, but definitely much cheaper than it's been since at least mid 2024. Now it must meet 6 of 9, so we're looking at 1, 2, 3, 4, 5, 6. Just makes it onto my watch list. Interesting company here. I do have an insurance company in my overall portfolio, Chubb. This one, Bro, ticker BRO. Brown and Brown might be another one to take a look at. Let me know what you think of Brown and Brown in the comment section down below. Is it one you're holding? Is it one you're buying right now? Maybe it's one you're selling and you're part of the reason for the downturn. If that's the case, let me know why you're selling. What do you see in this one that has given you the reason to sell? But again, drop your comments in the comment section down below. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Brown & Brown you would like me to cover in the Stock Pick of the Day series, drop in the comment section. I'll work it into the rotation on a day it pulls back. And hey, share these videos. Don't forget to hit all those buttons down below. It really does help. Thanks for watching to the end. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. We will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment for educational and entertainment purposes. Investing involves risk. You can lose money, so never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.